My name is Bhagirathi Mohan, and I'm the Chief Conference Producer at ETH, a Times Group initiative. I would first like to welcome you all in joining us at the third session of Money Gurukul Series 2024, which will be spanning across 15 cities. I would also like to start by apologizing for the delay, and thank you so much for having your patience. After two successful editions at Mumbai and Bangalore, here we are at Hyderabad to continue imparting education. Hosted by ETH in association with Aditya Birla Capital, Money Gurukul is in its 9th year, still aiming at empowering investors to move in the right direction by bridging the gap between information, investment, and action. This multi-city investor education initiative seeks to equip participants from all walks of life, including working professionals, young adults, housewives, and retirees with the knowledge and tools to make informed financial decisions. These 15 sessions will feature industry experts discussing a wide range of topics, including basic investment principles, mutual funds, portfolio management, and risk management, to name a few. In the interim budget 2024, Finance Minister Mrs. Nirmala Sethuraman and Honorable Prime Minister Shri Narendra Modi's vision for Viksit Bharat by 2047 represents the government's vision to transform India into a developed entity by its 100th independence in 2047. We believe that to pave a path towards this vision, our first step should be to continuously educate the investors to move in the right direction. Money Gurukul will focus on continuous financial literacy, which will equip individuals with the knowledge to make informed financial decisions, plan long-term financial goals, and manage market volatility effectively. Let's open this series with our focus on Invest Smart, balancing markets, financial goals, and long-term success. After all, Shikshit, Niveshan, and Investor will set the roadmap for Viksit Bharat. I would now like to invite Mr. K.S. Rao to open today's session with a presentation on Shikshit Investor for Viksit Bharat. Mr. K.S. Rao is the Executive Vice President and Head of Investor Education and Distribution Development for Sun Life Mutual Funds Limited, with over 3 decades of experience in the mutual fund industry. Under his leadership, ABS LMF has set up the standards for excellence in the mutual fund industry, winning the Asia Asset Management's Best Fund House for Investor Education and the Best Fund House for Investor Education from Outlook Money. To name a few, Mr. Rao is also a passionate advocate for financial literacy. He has spearheaded impactful initiatives like Nivesh Mahakumbh and Investors Hangout, empowering millions of investors across India. I would now like to welcome Mr. K.S. Rao to begin the presentation.
Thanks, Bhagirathi, for this introduction. Sincere apologies for the delay. It is this is our third session in 2024 with the Money Gurukul, and it's over last 9 years we partner with ET, and it's the entire thing is conceptualized by us almost in 2015. I think in October 15th, it was near Siddhivinayak temple. There is a Koyur banquet hall. That was where probably we had that wisdom of Siddhivinayak, and that journey is successful, and it's over 100 sessions as of date. And it's but today is the first session. We are starting late, and it's the first time in the last 100 sessions I could see the delay from this side. Especially the organizers part. Can you please the other one? And then it is. I can't see audience at all. This one, which is the middle one. Iske glass wala, down one. And yeah, now it's comfortable. Yeah. Sorry, I can see audience. Then it's like otherwise it's. I'm talking in the air. Like most of the times we are used to do a lot of webinars, and at the webinar end of it, you will not be knowing whether you are talking to yourself, you are talking to the screen. Webinars post COVID. COVID has gone, but we become mad with that. You just focus on internalized, and it's and I was telling Vivek and that Bhagirathi, it's like last week we were in Bangalore, before that we were in Mumbai. Both the sessions, it was supposed to be at 4. 3:30 hall was full. In fact, in Bangalore it was downpour rain, but audience were full. And we said the 3:30, then 3:45 we could make it happen, and probably the Hyderabad, we know sometimes audience come early. This is a good stuff, and then but organizers will come late. It's somewhere we live to the tradition of Hyderabad maybe. It's has been sometimes Hyderabad we used to बचपन में बोलते थे सब चलता है. And thank you. And this session probably you would have come with a lot of expectations because it is coming from the 18 now, and and we will ensure probably the expectations in the market will never be fulfilled. First part I can give as a disclaimer. When you expect something, unexpected things will happen, which we call my good friend JNG can tell us how the black swan events can happen. Things may go against the way you are looking at it. But but end of this session, we ensure we keep our basics right, and we can ensure we can go back, relook where we are doing right, where we are not. Less of the markets, more of the investment management. And in the personal finance, there is always the person before the finance. Each of us have a different goals. Each of us have a different mindsets. Each of us will have a different methodology to follow, so that none of us can have a similar goal. It is like during my examinations, if I try to copy from the person sitting in front of me, he got a series A, I would have got series B, my booklet, and next day series C, and I will go wrong when I am copying it. We can't copy it. We need to go back with how I can articulate myself as my investment. That's where we can look at it. And I'm sorry again. Screen is at low. I think this time my apologies to you all many a times. One is coming, it's late, and I know in spite of the traffic issues in Hyderabad, you made it to come, and but the screen ensure that your neck is not impacted. Otherwise, this video will be available in YouTube tonight in the ET Edge. You can go back and look at those presentations. You can take those screenshots wherever it is required, and that can happen. And let me also give you a story of the Money Gurukul again. When 2015 we do a lot of programs for the college students, to school students, to various segments of the people. We do one program called My First Finance Lessons for the school students. This is we adapted around 1,000 schools, and we do for the school children. Earlier we used to call it as a pocket money, how they manage their pocket money, what they understand. Are you all comfortable with English, or you want Hindi, or you want Telugu? English is fine, right? Thank you. Because I'm just little confused here. And then we were just looking at in one of the schools. It is so happened. It is a school in Bellary, and that is the time we asked one of the girls how you define money. She got up very comfortably, and she had seen that is the day the 1 rupee, our rupee symbol got initiated. That is the day it is launched. She said, nowadays schools people won't call you sir. When I was a child, I always call, even today, everyone I call sir. And this girl got up and said, uncle. And uncle, money I can define is, this is MY, mine. And that one is that 1 rupee coin. I can define she said in Kannada, and if 1 rupee I am getting somewhere, if I spend, I will be a spender. If I invest, I am an investor. The girl got a profound knowledge. That 1 rupee, the one coin, your Money Gurukul guide says. That's I think claps to that girl. I think definitely. Right? I think this young girl who comes with, and we said, why not be money? And since we are doing in the school, why should not we start as a Gurukul differently? I belong to a family of the teachers. My 3 generations. I'm a 4th generation teacher. Of course, my 3 generations are underpaid teachers. I'm an overpaid teacher. That's the only difference. And that's my great grandfather used to run a Gurukulam. My grandfather used to tell me. The teaching of the Gurukulam was like this: at 4 o'clock in the morning, students will come. 4 to 6, 6:30 they learn and they go back, and that is called Adhyayan. They will be taught. That is Adhyayan, and they go back and they come back at 11 and they do Swadhyayam. They learn on themselves what they learned. And today in IIMs we practice that. In Harvard they practice that. And then you come back and in the evening you reflect what you read and what you have Swadhyayam, and you work on it. This is called Swalochan. And this Gurukul we thought, we learn little bit about money. We know everything. I think most of us we know, and sometimes in spite we know we lose money in the markets because we know everything about the market, not about our mind. Because the behavior is the one most important part for us. Managing the mind is most important than managing the markets. And then today we will end up with some kind of a swallowchan. And today it is coming from the equity, ET. I always say ET for me is it is the education bringing the transformation. And it is also coming from the group which is called EDGE, EDGE. And today we will talk about that EDGE. That is, I think, my good friend Jayan ji is there and Girish is there. They will be talking about the equity, debt, gold, and other E could be your real estate, other E could be your your international estate. It's a way we look at. With this, I'll just move forward and this is from my fund house. We are in the business for the last 30 years. Today we manage roughly as of yesterday we are at 3,96,000 crores. And we are one of those top fund houses. But for us at Aditya Birla, two things. For us, business means the underlying theme is enriching the lives. Business comes very next, and inspiring the trust. In the process, we create that wealth. The wealth creation, we are in that. And some of you were with the Aditya Birla. Thank you so much. Some of us you can come later. We thank you. But even otherwise, we thank you all for all the support. With the group and with all of us. And today's topic, I thought we will start with, most of us here. I think today the speakers who are coming in. JNG is around 30 years, 3 decades of rich experience in the industry. And I'm also there almost 3 decades. And we have Girish coming with 18 to 20 years. And most of you are here who have invested for the last 25, 30 years. And these 30 years, what we have seen in the past, it is India's reform story, 1992 to till date. And thanks to the then Prime Minister Devi Narasimha Rao and the then Finance Minister Manmohan Singh for the entire reforms. Today we are seeing those dreams, what they had. Probably in 1992, we have not defined how 2024 looks. But in 2024, we can define how 2047 looks. That is our Vikshit Bharat. That is the dream. That is the vision. That is the mission. It is not the vision and mission of Honorable Prime Minister Modi ji. It is the vision and mission for every one of us. What is going to happen from now to 2047? We are just transforming from the developing economy to the developed economy. I still remember in 92, 93, I was writing my civil services examination. In the mains, there used to be a question they will ask. You write about Indian economy, a story, a essay. And that essay is always I need to write is India is a developing economy. And this year even my son is writing his civil services. Now he is also writing India is a developing economy. Probably his child will write India is a developed economy. Probably your children, your grandchildren will be writing in 2047. Means that is a Vikshit Bharat where India is transforming. But country is developing, am I developing is the question. That is where this entire financial literacy. If the nation is prospering, how do I prosper? We are not going to the nitty-gritty of how these reforms will, Honorable Prime Minister always says, you need to reform, perform and transform. How this transformational journey is happening? Probably if you all have some time, you can go to the Vikshit Bharat microsite. There is a fantastic 48-page booklet which can give you how the 12 sectors they are working on. And only a couple of things what you can do is how the India's GDP is going to go up. How many multiple cities India's GDP is expected to go up. From today it's a 4 to 5 trillion. How that can look at 20 to 25 trillion and how 4x, 5x. And the second is the best part for is the per capita income of Indians are going up. Means one side income is growing, nation is growing, and our life expectancy also is growing up. In fact, last statistics it has taken post-COVID in some of the cities where the pollution has come down, that has enhanced the life expectation by at least a couple of years for everyone. In some of us who intend to live for 81, we end to 83, but most of us in this room, probably most of us can see our 100 years life. There is a fantastic book written by one of the professors in London School of Economics by name Linda Granton. She has written not only you will have 100 years life, you may have to work for 100 years work life. Because the young boys here, they talk about financial independence and retire early. But retire early तो हो सकते हो, बाद में क्या करते हो? 40 साल में retire होना मजा है, but बाद में 60 साल जीना है, कैसे जीएंगे आप? Then how you plan for it? Even at 60, you need to keep working for it. You need to. Our life expectancy is going up. Means one side income is growing, and this will go, and the inflation will grow, and GDP is growing, and my expectancy is growing. If I am not planned for it, then I am not only putting the nation down, I am putting myself down. Like one side nation, like in the last post-COVID, the government is successful to make 25 crores of people above the below poverty line to the above poverty line. They are leading a reasonably good life, and we can't go back to the BPL, that below poverty line. Then in that we need to plan for our finances. Whatever we earn today, unfortunately or fortunately, we don't have it. Social security for all of us. Those of us in this room who are working with the government of Telangana, government of Andhra Pradesh, or central government or public sector, the pension is available, and there is a OPS which is recently remodified, NPS, which is looking good. But most of us, we need to plan for it. In fact, this is what I was talking to Jane. Jane was telling earlier, you were in public sector. I was with the public sector mutual fund. When I moved to private sector, the public sector mutual fund used to give us the pension. And somebody told me, one of my mentors, "Beta, you are moving from the pensionable job to," then he left the blank. I said, "Pensionable job." And there is no pension, but in the private sector, you get the pension. That's where it happens. Then in the Vikshit Bharat, when 2047, our intention is not to get into the pension. Intention is to get ourselves, have a financial independence. Ourselves, we can manage our money better. We can move forward with that. And this is what the Indian population is looking at, Indian GDP is looking at, and Indian economy is looking at. Population is expected to grow to 160, 165 crores. After that, population is expected to come down. Probably, 2060, we can look at Indian population coming back to 150 crores kind. There is a kind of, because most of us, we have a system of a single child. If you can look at the Chinese economy or Japanese economy, things are changed for very differently. They are struggling because we are in a demographics at the sweet spot. They are at a demographics. We are growing population. They are aging population. Probably that state will come to us somewhere at 2050 to 2060. And all that we need to prepare today so that you get ready. That's where we call Atmanirbhar Bharat, but we can have a self-reliant for ourselves how we can do this. And this is the whole intention of effort from ET, Economic Times, and with Aditya Birla. And a lot of things have been done from AMFI level on the financial literacy. This is where we are working with. And the learning should become part of our life. That is where we call it as a Gurukul. I think Mahatma Gandhi, who said, you have to live your life as if you die tomorrow, but you need to learn as if you live forever. We don't need to die tomorrow, but we need to learn forever, and so that we can live happily. And that's where. And I think Benjamin Graham, who said, investing in yourself is the best investment interest you can get. And today we are putting that. Today, most of you are spending next 90 minutes. You are investing here, and I intend to get you go back home with something you learn. I'm also an executive coach. I teach my coaches for every coaching session. I have one simple tool I use. The tool I call is a 3, 2, and 1. I said after the coaching session is over, you need to write back 3 things what you learned today in the coaching session. Then second thing, after 3, what are the 2 specific things you are most impacted? After that, what is that out of 2, 1 you are going to implement before the next session we are meeting? Probably today's session, you can use this as a principle for anything. Anything in the life. Each of us, something we learn. 3 things. One thing I learned is when you are coming to be Hyderabad, you need to be much more prepared than any other cities. You need to check the logistics in the morning at 8 o'clock, not at 4 o'clock. That's a good learning for me. Like each of us can have a different learnings and we can move forward. And this is with this, since the economy is doing well, Vikshit Bharat, we can breathe it out well. And there is not that everything is a straight line. We will see ups and downs. Not that market will go from 80 to 200,000 at one go. There could be many corrections can come. But the road laid out is looking good, prosperous, and nation is expected to grow even at 7 to 8%. And if there is an inflation of 6 to 7%, you need to have 14 to 15% of your growth rate. Can you plan for your investments in such a way your portfolio can give that kind of a double-digit return so that you can live the most happiest and healthiest life at the end 2047? You can say nation is developed. I have also developed along with the nation. I can see in Hyderabad, it's last few days, whenever I come to Hyderabad, I have this feeling, especially the Hyderabad is most popular because of real estate across the country. The most costliest real estate may not be next 6 months later, but 6 months before it was the most costliest real estate. And I jokingly tell people in Hyderabad, When I say myself with Jayant Garu, when we were having lunch in those days, we used to see twin cities. And after thanks to Chandrababu Naidu Garu, we had third city which has come, Hyderabad. But now after the real estate, there is another Bad has come, Hyderabad. Daku make so that is the fourth city. And you have a high prices, right? It is and you need to survive further. Then when India's GDP is growing, I keep asking the people, is your GDP is growing? I just take you there. And today, I think when Bhagirathi said, we all need to become a smart investor. Who is a smart investor? How you define you are a smart investor? And what is that smart investor definition for you? What you can look at for a smart investor? Smart is the first thing is the shikshit. Learning should be ongoing and it's a continuous thing for us. And it's the more you, I think Warren Buffett, whose birthday we celebrated, 94th birthday we celebrated on last month, 30th. And he always says, the more you learn and more you earn. I think learning is the currency for the next year. And you need to be a shikshit. And SEBI always says, educated investor is an empowered investor. You need to get yourself educated and you need to be empowered. Otherwise, you can see some data. I think some of you who are part of F&O by chance, and any one of you part of F&O, and if 10 of you are here, 9 of you would have lost the money and 1 would have gained the money. That's and I keep telling the young generation who is looking at F&O, बेटा अगर से आप F&O में इन्वेस्ट करना शुरू कर दिए ना, आपका फ्यूचर भी गया, आपके लिए ऑप्शन भी बचा नहीं. And because I know some of my child accountant friends, they keep telling, this is an engineering student, 38 lakhs net loss this year. I find he was no return, but 38 lakhs last year filed the income tax return for it. Just ensure. And I also keep seeing the people who are investing in the crypto earlier. I mean, today in the mutual funds, we struggle. Still, we got a 5 crores of investors, and in the crypto, I was told double the investors who lost the money. The greed is the one which takes you all of us. Means you need to be a shikshit investor. Then volatility is a part of the market. Market is the last 2 to 3 years. What we have seen is one-way run. It may not continue always, and some of you are lucky enough to see. And those of us who have seen from 92 Arshad Mehta scam days, 92 Arshad Mehta, 96 MS2 scandal, 2000 you have a what is that Infotech bubble, and then you have a Ketan Parikh, and 2008 depression, 2013 currency issues. Likewise, many things will come. And tomorrow what will come, we don't know. There is multiple wars are going on, and we have seen COVID, the virus which is not visible can create a problem. The visible wars can create much more problems. Then how you manage that volatility? In fact, it's a world, they say we are living in the VUCA world. Volatility, uncertainty, complexity, and ambiguity. For that VUCA, what is an anecdote is, you should have another VUCA. V stands for vision, U stands for understanding, C for clarity, A for ability to handle. You need to have that managing the volatility. Maybe, ET can give you that. And the asset allocation, what kind of asset allocation we can do? I can ask every next door neighbor in Hyderabad, the biggest asset allocation they have is real estate, and which is neither real nor an estate. And then you have a risk versus returns. We always look at the returns, and last 2 years, 3 years, I can say 20% CAGR, somebody say 40% CAGR. But what is the risk you are handling? Please be careful. I was told in Hyderabad, we have this ORR. They have enhanced the speed from 100 kilometers to 120 kilometers, the maximum speed. After that, accident zone has gone up by 180%. 20 kilometers increase has increased number of accidents by 80% extra. Imagine when you are at a higher level, the risk you need to understand. And the last is time in the market or timing the market. None of us can do the timing the market, and we can discuss. I think JNG can guide us at that time. Then how do I go for it? What is the simple methodology? How I can become a smart investor? All that you need to do is, why you are investing, ask for your why. What are your financial goals? And what are your financial resources? How you are converting your goals into that resources into the goals? Then what is the time horizon you have? You need to just look. This is one methodology where you can become smart investor. Here is a small video. Can you give the audio, please? Just somebody has to play from there. You need to click the button. This side, on your left. Bhagirathi, you have another 10 minutes to go. So
There is a super plan. Invest 10,000 now. After 6 months, take 20,000. Whatever you put, doubles.
Double?
Yeah. No, Mr. Kumar, na? He's also invested.
You know Kumar Sarna? He's also invested. What all he's got today?
Big house, everything he has got.
That Kumar guy, na?
He has also invested in a bungalow, car.
what state of
Arey, that Kumar, na?
His life is set.
Our Kumar sir now is car, everything.
You know that Kumar sir?
What doesn't he have today?
But who's this Mr. Kumar?
Mr. Kumar.
That Kumar sir. And,
Don't just go by what people say. Check the details of your investment scheme carefully before investing. SEBI, हर investor की ताकत.
any Kumar in this room? I know Mr. Jayan Kumar. But we should not fall that Kumar. There are two messages. One, there is a rumors go much faster and you end up losing. And Hyderabad, you can go by the history of Hyderabad, there are many scams. In fact, all India, if you have X number, Hyderabad can have a 2X. I can talk to you offline, I cannot talk here. And the second part I would like to say is, the second message, when we are creating this video way back in 2013, and that time I had my boss at SEBI, Mr. Damodaran, and we were just discussing at his home how we can, what is that impactful. There is a hidden message in that. Today we have less number of women. I can only say is, all the men who are the rumors passing, and only the women got the wisdom to question. Probably when you are investing, go back and tell your spouse that, this is the investment I am making. She should know what you are doing. And, both of you can do that family financial conversations. And then you don't become a Kumar, or she can't become a Kumari, and you can do that. And today then, during these conversations, we talk about a few things. We talk about, I think, series of questions about your, not only just financial goals, but the life goals. How you can go back home, how you can become a smart investor, and end up creating the wealth is the most important part. How much wealth we are creating, are we creating a true wealth, and what is that true wealth means, and how the mutual funds can become helpful to you. I mean, what is that we can do? These are the few things we will have those questions, and end of it, also I'd say country's GDP is growing really good, and it is expected to do well. But what about your GDP? I'm not talking about your gross domestic product. I'm talking about your GDPs, your goals, your dreams, and your plans. आपका स्वप्न, अपना लक्ष्य, आपका वो प्रणालिका, how you plan for it. If that GDP is, you have your own castle you build there. It is for you, your family, you build the finances. And what is that? You're planning. For me, this castle is an acronym. The castle which we build. I mean, what you need to look at is your cash flows. That is the most important part of it. I mean, most of us, we have enough assets. Like, I have seen during the COVID, people have heavy on the assets. They are asset rich, cash poor. And at the time of death, something was not available to them at right time. And that's where I say financial coach is required. You need your cash flow, you need your asset allocation, you need to do your taxation rightly, and you need to have your succession planning. Then what kind of leverage you are taking, which loans you are taking, which loans you are not supposed to take. Look at what kind of a discipline, and last is the estate plan you can work. And how do I start investing? When to start investing? Probably the best way to start is when the child is born. The best next is to start today. I mean, whatever we saved is not sufficient. How we can enhance? Today in mutual funds we talk about not just step up your SIP, and converting your savings into the investments is the most important. Saving is, we are all good savers, but how we can become a good investors, and that investing will make us rich. Not the saving alone will not. Savings bank will make you poor rather than making you rich. Investing will make you rich. How that investing rightly is the most important part. When we work hard for money, money can work hard for us. And what is the power of compounding? We can look at how that can work for us. And a simple methodology, I call this is also an SIP way of doing it. What you can do is save more, invest for better, and have a patience to wait for longer. Just know in a coffee shop, JNG, and we were discussing DG and JNG, Vijay, we were just discussing. The people who have invested, it's how that is multiplied into wealth. I still remember in the month of January, I was invited here to Hyderabad in South Central Railway. This is one of the officers who was retiring. He has invited me on his retiring function. And then on that day, incidentally, he also called along with him a financial advisor whom he was trusting for the last 20 years. And in railways, it happens on the retirement day, they will be getting their retirement check. And he got some 1.82 crores or something for his 32 years of service. He got his retirement money. And during his final ceremony, he was mentioning, he took his statement of account and showed to the people, this is 4.4 crores. Which is thanks to my financial advisor. Systematically, I was saving 20,000 per month for the last 20 years. That is the difference of savings, power of savings. A simple 20,000 can make the difference. Then the 32 years of hard work, your provident fund. I think that is the power of compounding where you can look at. And it is like, how long you invest is the most important than, where you are invested. All other factors are irrelevant. You start early, that's where you create true wealth. And power of compounding will only work power of investing. Otherwise, power of compounding can work another way. If I am buying things which I don't need, I think Warren Buffett who said, if you buy things you don't need, you need to sell the things you need it.
Correct.
And that is the time where you need to look at power of compounding is power of investing. If it's not power of investing, what I'll do is I pay my EMIs. I have my friends in Bombay where I work. Half of my colleagues, they end up working for the companies just to pay for the EMIs, nothing else. And you don't want to do that, convert that into other EMI. That is equity monthly investing, not equated monthly installment. Change your EMI language. And mutual funds are the best way. I represent mutual funds, and it's for me, I don't know anything other than the mutual funds to invest. And for me, I always look at mutual fund is a mutual friend for everyone to accomplish the goals. I had a boss called Mr. Kurian way back, and he used to tell me in the morning, बेटा म्यूचुअल फंड्स में 2 ही लोग निवेश नहीं कर सकते हैं. पहले the first person is the guy who has not yet born. The second person is who is dead and gone. And otherwise, mutual funds can have 1 day to 100 years. I can invest in mutual funds, and the easiest way I can invest. Whether you invest in the stocks, whether you invest in the banks, whether you invest in the real estate, whether you invest in the gold, mutual funds can become a vehicle to invest in any of these asset classes. And how you can invest is don't invest because of the market, invest because of your life goals, convert that into financial goals, and end up with your financial independence. I'm sure we will listen from Girish a lot of these insights. Today both of them they represent in a very interesting way. One comes from the advisory, other comes from the upvisory. Advisory to upvisory, we all can get upwise, and that wisdom. I think this is a period of Navratri for Ganesh Navratris. And Ganesha is always stands for knowledge and wisdom. You go back home with upvisory and advisory. And mutual funds, it's a much low cost. In fact, on 26th of September, we are making mutual funds much more easier. We are making SIP 250 rupees. You can give SIP per month gift to your home help, your cook or your homemade or your driver. Even 250 rupees is sufficient. You can start on as many. For the children, you can encourage. It's a habit of savings. It is a mutual funds is a low cost. Money is available whenever you need it, and it's a professionally managed. You don't need to worry where the market is going. You put your goals and just invest in the money, and it is well regulated today. It is. I think it's investing in unregulated is most dangerous part. But before I sum it up and giving the stage back to Bhagirathi, I can only say is while investing, ensure that asset allocation is right. And asset allocation right now it is more right because if you are driving in ORR 100 to 120, when accident rate has gone up by 180%, when markets are at its peak, you need to wear your seat belt. That seat belt for you is the asset allocation. If you have the right asset allocation, even market falls, you don't fall. Probably your airbags gets opened up and you are cushioned with your debt and other investments. You don't get into that shock. And invest in those assets which can grow in value, invest in those assets which can give income. Combination of both. Don't be too greedy of, if we eat only biryani, we get diabetes. However, biryani is tastier. We need to get back to our proteins, we need to balance our carbohydrates, and we need to become health specific. And that's where you need to look at what can give you the income, what can end up it when you are investing your money. You should have a peace of mind at the end of the day, but not pieces of the mind. And ensure that risk versus return. Every asset class is having the risk. Understand that risk. There is no asset class without risk which is available. And you all have driven here to Lemon Tree driving in Hyderabad is much more riskier one. Which guy will, in normal course we will have cameras, either front camera, back camera. Hyderabad you need to have a dish camera, the total 360-degree camera, because which guy will come from the left, what he will hit, and when he will hit, you don't know. And that way, risk is there everywhere. Understanding the risk is the most important, and you can't take away the risk. You can only manage the risk. How you can manage the risk is diversification. Mutual funds is the best way to diversify. Understand your goals, how long you are investing, what is the risk involved, and there is a riskometer for every mutual fund schemes. But I would like to tell you, if you are not investing, that is the biggest risk again. You need to take that risk, but you need to take that risk with understanding, not without understanding. And sometimes we put it in asset class. If I am putting for equity for lesser period of time, is more risky. But if I am not investing in equity for the longer period, it is the highest risk. And then you need to understand that, and you put your asset allocation right. And you have various schemes of the mutual funds, but all that you need to do is write asset allocation, go with your financial goals. If you have for a shorter period, you have a liquid fund, little longer, you have a duration, little longer, you have a balanced advantage funds, then you have an equity, then depending on your goal, your retirement goal, it can go for how long you are in that horizon, you can invest accordingly. As I said, there is a scheme for every need of everyone. And time in the market, sometimes you will be successful, but timing in the market, you may be successful for limited times, but time in the market, you continue to stay, you will be successful every time. It's like, kaun banega crorepati, some of us can go and win of the 500 people, only one can get there. But here all the 500 can get if you are putting your money rightly throughout the season. And SIP is the best way to invest, and systematic investment plan we talk, it is automating your savings, and it is impacting on your behavior. I think there is a wonderful book called Atomic Habits, where you can look at, this can become a habit that can create a wealth for you in the longer run. And SIP, then there is a STP, Systematic Transfer Plan, where when markets are high, you don't know where it will be, then you have the money parked in the liquid and get into the equity, so that you keep investing and you are in the market. And when you want to get back your money, there is a systematic withdrawal plan where you get back your money. You can ask the mutual funds to say, every month you pay me this money, and they can transfer to you. Everything can be automated and you can get there. I think it's a Benjamin Graham who said, in the short term, markets are like a voting machine, but in the long run, they are like a weighing machine. And you need to just put for the long run, just don't look for the short term, and invest for the long. And what is safe in the short term, what may not be the safe in the long run, put it in such a way, your less money, lesser period, you can put in the cash, longer one in equity, vice versa. What is in the risk? If you are putting in the equity for the short term, then it's a risky piece. And you have an expectation that market will go always up. Now, journey from 50 to 80, you would have seen one upward curve, but it is not always. It is the markets. There is a year you get a zero return. There is a nominal return. There is no return. There is a negative return. And you need to prepare for it. But over a period, you can make money. And end of it, you can do what you can control. Certain things you have a control. Certain things you don't have a control. If the Russian war, you don't have a control. COVID, you do not have a control. What you have a control is your process. And what you can do is you can do how you can respond to it. And best is to have your financial coach that he or she can guide you very rightly. And you have a control on what media not to consume. Today I have seen I consider most of the investors. I go to Gujarat too often, and I see they are the most evolved investors. And sometimes I saw what I have seen in Gujarat is of late, they are the victims of these WhatsApp channels. And overgreed make you to lose. Be ensured however somebody looks like, there is one channel which I was in Rajkot, I was talking to the few investors. Together that group has lost 48 crores. How they lost is, there is a professor who was running a WhatsApp channel, and he has proved that he is a right guy and great guy with the past data. And all of them trusted him and invested. And over the last 6 months during the bull market, they have lost 48 crores. Just ensure that, learned people can also do the mistakes. I think it's, there is a saying in Hindi, like what we call, log bada patron se nahi, chote patron se like mushkil zyada paata hai. You just look at, and when you are investing in the mutual funds, I always look at, people will call us and ask, what what is the NAV today, and today we are most comfortable on the apps, the ease of doing the business. And if I invest with any one of them, I know my NAVs every day, it's available to me. Every day evening I'll get to know. But probably that habit we need to get out. For me, NAVs are 3 NAVs. The day you are investing, that is called net asset value. The day you are till disinvesting, till your goal is achieved, that NAV is never available value. The day you want to redeem, that is now available value. Just ensure, don't look at every day you shoot that. And saving for a long term, it is easier said than everyone saying in the bull market, I am a long-term investor. If the market corrects, you know how many of them will stay back and invest. And you should not get that panic. And we will be luckier in a shorter time, but build that skill, not the luck. Even luck can be like this, LUCK, labor under correct knowledge. Even short term, you want to take some call, understand with right knowledge, take that for knowledge. Build your skills, that's where you can work. And self-education is the best one. I think formal education gives us a living, self-education will make us rich. And look at that self-education. This is where we are trying from the Gurukul, and focus on return on investment, certain things, and return on impact on certain things. ROI for you is self-education and focusing on your physical and mental health. This is my last but one slide. I mean, if you want to create wealth, this is a simple template I can talk about. What you can do is have your goals, have your budgets, and stick to those goals. We are all worried what Nirmala ji can present the budget, and we don't have our own budget. If I ask most of the audience today, time positively, I am not doing the poll, and most of us will say we do not have an annual budget or monthly budget. This year on the annual budget day, I was there in Thrissur in Kerala. I was doing a program with Malayalam Manorama, and on that day there was a huge debate in the room, and it was little over 350 audience. And debate, I think the people who read from the front headlines to Niche, printed and published by Manorama, and they read everything and they came back. And end of it, everyone was debating on the tax. I asked the question, how many of you are taxpayers? Incidentally, of the 350 people, only 30 people are taxpayers. But 350 were making a noise. We want to dictate what Nirmala ji has to do it, but we don't follow our own budget. Have your budget. Then the second best part you can go back is have your financial coach. Coach can make a lot of difference. I remember this Manu Bakar when she was talking about what made you to win the medal and how you have survived from the last failure to this time successful. She said, my coach has made a difference. And then coach can make a lot of difference. Those who got a financial coaches, even today, I consider myself, I would have read little more, but I have my own coach because I don't want to manage my money, because one of my cousins who is a doctor, he said to me, I can't operate on my child because I will be emotional. Then I thought, I can't manage my money, I will be emotional. Better somebody manage my money. And then financial goals, build your emergency fund. That's the most important part of it. If you have emergency fund, market can go which way, it doesn't matter, because it will make you sufficient for you. And have right insurance, your health insurance and life insurance. Third one is minimizing the debt is the most important part. If I have one house for the loan, second house ke liye loan lena hai to loan, go back and reverse loan nullo. It is not required that second house, because it is not an asset which can create wealth for you. And save first and spend later, and invest wisely and plan rightly, and focus for the long term and diversify. Last question I would like to ask, how many of you have written will? Yes. Thank you so much, sir. I mean, of this room of 200 people, except 199 believes in Lord Ganesha. Because you will also believe in Ganesha, but at least with a deadline. Probably that's the most important part for us. And this is the last, I can say, if you want to get a financial income, financial independence, let your earning income can convert into the passive income or portfolio income. That can make you the financial freedom to happen. This is an educational initiative from Aditya Birla, and we come on the aegis of SEBI. And anything you want to write to SEBI, they have a wonderful website called sports.gov.in. Anything you want to write, complaints, In fact, last week I was in Ahmedabad, and I came back from Ahmedabad. There was a complaint on me in SEBI, which says I said one word there, tips will not make you rich, tips will make you rich. This man has written a complaint there to SEBI. I said tips will not work. Then I told SEBI friends, for me that tip is not the tip what we are stock market, sir. That tip is targeted investment portfolio, and then you can get there. You can write even any complaints if I spoke wrong or anything. And they also, SEBI has recently launched the educational website. You can get, it's a free, you can make yourself educated, you can make your children to go through that, look how to learn about the stock market, how to learn about the capital markets. I think this is a certification program which you have. And thank you so much, and over to Bhagirathi, and thanks for this patient hearing. I'm sorry for the delay. Sir. Thank you, sir. Probably there is no income tax for the claps, it can be a little more. Thank you, God bless you.
Proud for this insightful presentation. Investing wisely is a very crucial step towards achieving long-term financial security and growth. And moving forward onto a panel discussion, which is closely curated to deliberate on the theme for this series, which is Invest Smart, Balancing Markets, Financial Goals, and Long-Term Success, discussing key topics like smart investing, budget implications, balancing markets, retirement planning, estate planning, to name a few. For this panel discussion, I would like to welcome our esteemed panelists. Our first panelist for today is Mr. Jayant Kumar, who is a freelancing financial advisor. With nearly 30 years of rich experience in finance, Mr. Jayant has held leadership roles at regional, zonal, and national levels across prestigious organizations like Shriram Group, Kotak Mahindra, and JM Group. He has expertise in hire purchase, bill discounting, resource mobilization, and wealth management, serving retail, HNI, and institutional management, to name a few. Welcome, Mr. Jayant Kumar. Our next panelist for today is Mr. Girish Latkar, co-founder and partner at Upvisory Private Wealth. Mr. Girish Latkar is a co-founder and partner at Upvisory Private Health. He is a seasoned finance professional with over 18 years of work experience in various capacities in banking and wealth management. He specializes in creating customized, holistic investment and financial strategy. He has well-rounded knowledge and various facets of wealth management, asset allocation strategies, products, and legacy planning. He was earlier associated with Citibank, HSBC, and ICICI Bank, and has started his entrepreneurial journey in 2015. Welcome, Mr. Girish Latkar. And finally, I would also like to invite Mr. K.S. Rao again to join our esteemed panelists. Very warm welcome to all of you all, and thank you so much again for bearing with the delays today. Before we start our panel discussion, can I kindly request all our attendees that you've been given cue cards and pencils. So if you can jot down any questions that you have and pass it on to the ushers, because we would like to make this a very interactive discussion, and we've got esteemed panelists to join us today. So this will be your chance to have any questions answered regarding smart investing. So without any delay, I'll directly delve into our first question for today, which will be for Mr. Jayant Kumar. I know Mr. Rao briefly touched upon the importance of asset allocation, and what are the ways to correctly do asset allocation? Any tips that you can share with your audience today?
Before I give any kind of advice or my whatever my lessons out of my own experience, I first would like to thank profusely Mr. K. Rao, and who has been my very old friend, and we have grown together, we have seen the markets together, and many times he was making a mention that we have passed a lot of days understanding the markets, etc. And I also would like to thank PTHT and my co-panelists, so who all have been here. So one thing what I just would like to say is that when it comes to the question of asset allocation, I just would like to start with the premise that why one should look at asset allocation. I would like to say anything if I am not from any kind of a premier business, institution, etc. But if at all, if any university I have studied in and grown in, it is the market. I would like to profusely thank all my investors whom I have been serving right from 90s, where we have seen glorifying days of NBFCs. Those days, what we used to hear is only debt. After that, like Rao mentioned about Harshad Mehta scam, that time we were the kids, we were trying to understand what equity was. And likewise, actually, it has happened. So at some point of time, all of us used to believe equity is the only asset class which can actually help us achieve our whatever set objectives. But over a period of time, we have understood. Again, I'm coming back from 90, when the interest rates were almost 15%. And thanks to the visionary Mr. P.V. Narasimha Rao, who has actually initiated all kind of reforms. And he was the one who has propagated and who has actually initiated all kind of reforms. And we have seen gradually the interest rates coming down. I don't see any kind of an objection to mention when I used to work with an AMC called Kotak Mahindra. We have at that point of introduced serial plans. What are those serial plans is that at that point of time, most of us were not even knowing GSECs, whatever we are talking about today. So those GSECs were only meant for one plan, maybe 20, 25, etc. So in fact, if I start actually talking about this, probably I might be crossing whatever the time barriers we have today, but I would like to cut short and tell you, during those times when the interest rates were falling, and when a particular maturity was there for 2025, 2016, I'm talking about maybe 2000 onwards. So the longer the duration and when the interest rates were falling, all these G6 and debt securities, they were commanding the premium. And the returns have been fabulous. I don't want to ask anybody, but the returns were average between 23 to 25% with 100% protection. Even in case if one wants to actually reading in between, they were not into the loss zone at all. So what has happened is that we have seen one asset class doing well to the perception that equity is a fantastic asset class. Then after that, we have seen the equity, I would say, return something like on debt, which was more or less equivalent to debt. And in the initial days, we have been told that gold is an asset class which will not actually perform, or even in case if it performs, it will perform much lesser than your inflation. But I can tell you that if I can take 20 years history, 15 years history, now gold is doing fantastic. If any asset class after equities is doing very well, it is gold. And my only concern with gold is that I don't recommend cosmetic gold, I don't recommend jewelry gold, I only recommend, okay, you can always buy through commodities, you can always buy mutual funds also gold. So that's okay. So having said that, what do I say is, I was trying to tell you what equity can do, and what actually debt can do, and what gold can do. And of course, I don't want to get into asset classes like your silver or REITs or maybe for that matter international equity. But having said that, I am a person, I always believe in data. I always believe in what has happened in the markets. So if you ask me, what happens is, let's say this year in case if equity has performed very well, there is absolutely no guarantee that equity will continue to perform next year. Similarly, if gold has done very well because of uncertainties or because of some kind of issues, if gold has done very well, you don't know that gold will continue to do well. So obviously what will happen, the leadership among the asset classes will continue to change year after year. And within equity itself, why is that we are talking about flexi cap funds? Why is that we are talking about large cap funds? Why is that we are talking about sectors? The leadership starts actually rotating from one to the other. And even in the tech also it can happen. So what we actually have studied is that, I just would like to sum up maybe in the next 2-3 minutes. We have taken the data for the last 15 years where, let's say, we have invested 70% into equity and 30% into debt, and the other side it is complete equity, 100%. Amount invested is the same. And when we have seen for 15 years, the difference between the performance, if you look at 100% equity to 70% and I mean to say 30%, 70% equity and 30% debt, the differential is very, very minimal. The question is minimal in the sense, if this guy has given, let us say, in CAGR of, let's say, in some 16 to 17%, 100% equity, maybe 15.8 or 15.9 is the return that has been generated by a composite kind of a portfolio. But what happens is, if you ask me, I will say, generally everybody comes and says that आप equity में पैसा लगाओ, you'll make excellent money. Equity is the only asset class and which can actually give you the highest amount of power of compounding. But all those things people say, but it actually comes with a catch. The catch is you have to stay longer, long term. राव जी भी बता रहे थे long term क्या है, 10 साल. I of course take this forum for granted. I would like to ask you what is long term. Jim, in 1990 when we asked to, what we have been told is I was working for a securities firm. Long term is just invest today और शाम को बेच दो. That's long term. फिर इसके बाद हो गया टेम्पल्टन वगैरह दूसरे म्यूचुअल फंड्स आए थे. They started preaching us 3 साल. Then after that Fidelity has come in and they said it is 10 years. Well, admit that when we stay longer, the power of compounding also goes up. But what happens is, what is long term? In case, see today with a strong intention that I should stay longer in the market, I come out, but I never know what can happen tomorrow. So equity is an asset class which can behave extreme. It exhibits a lot of extreme volatility. You never know. Today I am investing, tomorrow in case if any event risk, I don't think it is anybody's imagination. If anything comes in, probably market will reflect the same. But whereas, if I am going to do the asset allocation, like say I am going to invest some percentage into equity, I still say that in case if you really want to grow and if you want to ensure that our portfolios really do good performance, you have to necessarily increase your exposure to equity. But that all depends upon your risk absorption level and the time horizon that you are looking at. So it all depends upon it. You have to actually link it to the goals. So again, I'm coming back to the, I mean to say that, of course, sir, I do not know whether I'm supposed to make any mention of a particular mutual fund because I know that as far as ANFI rules are concerned, whether I should make it or not. But I have got the conviction after seeing a particular data. This is a particular data which I want to say that a particular mutual fund, which I do not want to talk about, but it's a very, very esteemed and a large mutual fund. They have started their operations this particular fund in the year 2001. They have come out with a fund called multi-asset strategy. And if somebody has invested some 5 lakh rupees and had waited till 2023, I'm talking about maybe 20 to 23 years kind of time. And we have made a comparison with other multi-cap funds or flexi-cap funds. We have realized that these multi-asset strategy funds has almost delivered the same performance, or with one fund, if you compare, they have actually delivered a better performance with less drawdowns. When I'm saying less drawdowns means during the travel of this 20-22 years, the number of times the market has dipped. While the all equity funds have actually generated negative returns, this fund predominantly delivered lesser negative returns and has helped the investor who actually wanted to exit at some point of time. So, if you are an investor, please look at, as I told you, that gold is an asset class which is actually doing extremely well after equity, and then debt, etc., etc. So, I now say that if you are an investor, when you cannot predict that when you really want to exit from the market or you want to redeem from the fund, and also whatever the vagaries are which are associated with equity, in case if you want to reduce that, asset allocation can actually help you extremely well as far as I mean to say the in terms of accomplishing your targets. Thank you.
Great, that's really elaborate. Thank you so much. Just going back to looking at this room, we have people of different age group, from Gen Z to millennials to some individuals already starting to plan their retirement. So this question is for you, Mr. Jain Kumar. What would be your advice? Mr. Girish Latkar, I'm sorry. I'm not able to see because of the lights. Sorry. What would be your advice? For the retirement planning for these different age groups? Because I know Gen Z have access to data and mobile, whereas the more traditional method is depending on markets and talking to people. So what is your advice spanning across all these ages?
Thank you, E.T., Abdullah, and co-panelists. I think Gen Z is quite well informed. I don't know if I can advise Gen Z and stuff. But the thing today is just that there's so much data. 10, 15 years back, people in the market would know the biggest thing was data, how to extract data, how you analyze and all that. Today, every analytics is just a touch of button. The bigger issue is decision making. Having said that, I think from the spectrum from Gen Z to millennials to people who are middle aged, earning to who are closer to retirement, and people who are retired already, obviously it's different risk appetite bracket altogether. The formula remains the same. I think one has to really hold on for the long term. Gen Z today is focused on a lot of trading. I see a lot of people trading, even my age, younger than me. Everyone's hooked onto trading. Everyone believes markets will deliver 20% CAGR every year, which we all know doesn't happen that way. I think the crux of the thing is to take a leaf of the earlier question, asset allocation, which is, I always say, it's the most important thing. Just to add on to what Mr. Jayant also just earlier mentioned, asset allocation is like, it's like this: if 10 people in a society go to gym, not everyone gets the same results. Essentially, because everyone has a different eating pattern, sleeping pattern, body type, so on. Similarly, everyone investing in equity may not get the same results as your neighbor, because our instant comparison is someone who's saying, I made this much money in equity. Because as a person, you're different. So it's important to understand your risk appetite, create an asset allocation plan. If you're Gen Z, your only goal should be investing, saving and investing. That's all. If you're someone who's close to retirement, it is more about securing the wealth that you've created and conserving it. Adding on one more leaf to it is like what Mr. Rao said, creating a will, because one thing is wealth creation, next thing is, kind of also passing it on to the next generation. So these are very important aspects of, the entire journey of investment. So, like I said, it's only about investing and staying invested more than, panicking in the market or exiting out of fear.
Great, sorry, and that was going to be my next question actually to you. And one has time until one doesn't. So I know you mentioned about will writing and estate planning. Can you throw some light on what's the importance of this? What's the right way to go about? What's the right time to actually make a will?
The right time is today. Like you just asked, who has written a will? I think after COVID, it's become very evident that everyone is we don't know what's going to happen tomorrow. And that's the reason we see a lot of splurge on travel, consumer goods, because people just want to live the day today. Okay. But one thing that people miss on is that if you, in the journey of minting money, creating wealth, trading, investing, what we tend to forget is that it's also important that you pass on this wealth seamlessly to the whoever in the family is. I have seen enough cases where people haven't written wills and then the family keeps struggling for years to get the certificate from court, and then go to mutual funds, then go to real estate, then go to registrar to settle a lot of property issues and whatever is left. And people don't know. The family doesn't know. Actually, if you have any outstanding in the market, you have lent money to someone that needs to come back. So it's very important to document these things. I think a will is essentially a document. And like I said, the time to do it is today. It can be just a simple paper. You can just write on a simple piece of paper, date it, prove it, so the will is done technically. So at least you've captured your thoughts as to who should get what in case something happens. There are a lot of cases of missing nomination, simple stuff. Though SEBI has kind of made nomination mandatory, but we have seen enough and more cases where money is stuck, huge money is stuck in savings account just because the SBI account didn't have a nomination. So in the rush to create wealth, we tend to overlook very small aspects of investing, saving, making an FD. We don't nominate. Those kind of things which get overlooked. And even if you've done everything, a simple thing is that nominee is just a custodian. If in the will I write something, that overrides the nomination also. So it's very important to kind of document these things so that in case of eventuality, the family knows what your assets are actually. And if you owe someone something, if someone owes it back to you, so a lot of these things are captured. So I think the rush is only to mint money, but not to really think about how this money can get transferred. One thing to add is we have seen enough and more times, and we have enough and more kind of sayings on this, that one generation really works hard, creates wealth, second generation blows it away, and third generation again starting from the scratch again. We have seen very big business families, a lot of relatives around us, ki dadaji ki land thi, wo hua, ye hua. A lot of those things keep happening. Hence, today's world where you have everything, you can write wills, online, everything has a nomination, so everything is documented. It's not the world that we saw even 50 years back. Hence, a lot of things favor the investor. Hence, it's the investor responsibility to make sure that everything is in properly documented and nominated. Because 50 years back, people didn't have the option to really go to an advocate and write a will. People just wrote, properties just got vanished and occupied and stuff like that. That is not the story today. I think there's enough and more awareness, enough and more tools that one should leverage on and focus on these things.
Great point. And I think I understand from this that talking to your family about this is really very important. And I know, Mr. Rao, you mentioned that generally you have a budget for the country, but you don't have budget for the family. So, how important is it to have open and regular financial conversations within the family?
Thanks, Bhagirathi, for that question. And probably I'll take it from where Girish says that it's like, will writing when you are doing, it gives you some kind of you are keeping the end in mind. And when I write my will, I will be writing about what I own and what is that liabilities I have, and I am passing on the information to my family. And he also mentioned when it is a nomination, and for example, you have invested with us in our fund house, and say I have invested in my fund house, and I have nominated my wife, and God forbidden, tomorrow morning if I am not there, my wife will not be knowing what are the schemes where I have invested. It is like, writing the will is one part, making her know what is available is the most important part. And during COVID, we have seen a colleague of mine, she was just 24 years, we lost her. And we lost her father first, and we lost her mother and her uncle. And she could not claim any money what is available because everything was on the mobile, there is no passwords. Then you can't get their money. You have a wealth, but you can't inherit. And we need to question ourselves: am I passing on the inheritance, or am I passing on the mess to my family? We own our family, what we have got it, and it is a responsibility for us to make that family to take back, and they will fully claim. And today, if you can look at investor protection fund, there are two data which can be roughly around 82,000 crores, which is unclaimed money which is available. And I was also looking at the data a little more microwave. On the this is on the bank deposits of 10 years and above, which is not claimed, etc. Roughly 32,000 crores. Means we are not informing, and this money is available. Family is not known for it. And this is one aspect of will writing is the most important. And second is family conversations. Not just a conversation. Today we are most of the times living in this digital world. And if I am not there tomorrow, or this mobile is lost, where the data is going. Better is to go back to our parents or grandparents' time, writing physically the what documents, writing all that. Who is my financial advisor? Who is my lawyer? Who is my child accountant? And where I own, what I own. In fact, we have a wonderful book. I don't know whether they are given today, but you can download from our website. All that what you have, even that PDF file, you can just start chatting it. And second part on the family conversations, why I say family financial conversations should become a dinner table conversations or lunch table conversations. We believe sometimes it's a male chauvinism, and I know everything and my wife does not know, and probably your wife knows much better than you know if you have a conversation. Second part, we don't want our children to know about our money, but it is better to educate our children at the very end stage how our finances are managed, because they understand from the roots from which we have come, they won't overindulge on it. And it is our responsibility. We take that year which we are taking our child to a supermarket, that is a year we need to take the child to the bank, how the money works in. I will tell you one classic story. It is one of my nephews who stays in Australia. He came for an holiday. And I was talking to him before going. I was giving him $100 for him. And he said he will take $50 back to Australia and $50 he will spend here. I asked him, what you do with the $50? I said, I will go and save for it. And the same another nephew in Hyderabad, I also gave him the equal amount. I thought, let me do the differentiation. Why should I? I asked him, beta, what you will do? Pata nahi what I will do. And second, I asked him my Australian nephew, when I asked him where the money comes, my mother works hard, my father works hard, and they will earn money for us. And I asked this boy, what is that, where the money comes in? Uncle, money comes from ATM. And that is the financial literacy we have our children. It is our onus of responsibility to talk to our children about the money, not exactly managing the money. And also need to say, when we were kids, I still remember those of us in Andhra Pradesh, we had Andhra Bank used to give us a kiddie bank, the smaller one where you can go and put that money. And today that kiddie bank could be on your birthdays of your child, your daughter or son. Why don't you give one SIP as a gift to your child? And that SIP, the moment when they are born, the birthday, you give that gift. The moment they come to 3 years, 4 years, they know how to get the numbers. Beta or beti, you got this money is invested. Or if it is on their birthday, for example, if your daughter's birthday is today is 10th of September, and 10th September you give, and you ask her to remind every 10th of the month, this fund house will remind me whether there is a money in my account. Then children will know there is a money has to go from the bank and that will be invested. As they get into the school stage, the statement of account they will see, they will come back and ask, Papa, last month you have given, there is 80 units. This time why you have given only 78 units? Then you can talk about the children, how the NAV is there. Then as they grow, how the portfolio is there. We talk how many years about Warren Buffett created a wealth. He is a great guru, definitely, no doubt. Charlie Munger, we can learn a lot. But when we can make our children Warren Buffetts, that is a financial conversation we should have at home, and we can teach the children how the money works in, and have these family conversations. And when you do these family conversations, you have a common family goals. I would like to tell one story which has happened during COVID. This is about, like Bhagirathi, I had a couple of friends in Hindustan Times, and both wife and husband, both of them are journalists. And incidentally, both of them got sacked from the job. And both of them are owning flats, which each of us, they do not know what is the kind of EMI they are paying. Within 3 months, one of us has to sell the flat at last to cover up the EMIs. Means while doing these conversations, what is happening is, you know your financial status, what to spend, what not to spend. I also keep telling the boys and girls nowadays, when you are doing this dating, you also need to do financial dating. You should understand that. Otherwise, I have seen the divorce rates are higher where there is a financial problems are coming in. You should have this financial dating too. Have these conversations very openly. Probably I will have a privilege to ask each one of you. Maybe this Sunday, take some time, 15, 20, 30 minutes, quality time, rather than spending on the Netflix. Talk about your net worths. I think that can make a lot of difference for the finances.
Great advice. And net worth of Netflix is a line I'll carry out from today, Mr. Rao. Thank you so much. I know we started this conversation talking about, budget and, how we have a plan for Viksit Bharat. So post budget, Mr. Kumar, this question is for you. What are the market trends and how can we, proceed with investing? Also, what are the common mistakes that one could make while investing and any ways to avoid them?
On the day of the budget, when the budget has been announced, and when I was speaking to my capital market friends, the first reaction, tax बढ़ा दिया, short-term capital gain, long-term capital gain, STP सब बढ़ा दिया. And I was actually waiting for what will happen. Will really markets fall to a larger extent? And to my dismay and surprise, it has not fallen. Dismay was in case if markets were actually correcting sharply. I thought it will be an opportunity for me to take an entry into the market, which hasn't happened. Okay, having said that in a very jovial and lighter manner, I just would like to say, by increasing the taxes, it has affected the sentiment to a certain extent negatively. But if you actually look at, there are two factors which has actually, I mean to say, you can probably look at as positives. So the one is that there has been a substantial reduction in fiscal deficit, which should be actually viewed as a very positive. And second thing is that there has been a lot of emphasis and increase in the, as far as the allocation of welfare schemes are concerned. And of course, a lot of emphasis on, infrastructure spending. So if you look at as far as infrastructure spending is concerned, in long term, it will definitely pave the way for the growth of the economy. And second thing, though, in the short to medium term, increasing the budget for welfare schemes can be a dampener, but what can probably happen is it will boost the consumer spending and it will probably be helpful for the economy. So having said that, why there was no so much of negative reaction as far as markets were concerned and why markets have not fallen? So this speaks about, like Mr. K. Garu was saying again and again and again. Again, I would like to say, sir, you have become a messiah. You have become an evangelist, not just only for Birla Sun Life Mutual Fund, but you have become an ambassador of mutual funds per se, or to a certain extent for the Indian economy. So what is actually happening is that people have seen that they have a very, very positive sentiment. What is actually driving the markets today is that they believe that the existing government is actually going to bring out a lot of reforms and a lot of measures which can actually boost the development of the economy. And for this, what I would like to say is that currently markets are valued, if you look at your price earning levels, trading, if I say, it will be around 22 to 23. And then if I take forward, it should be around 20. And long-term average, we are at 20. So we are only just 2% more than the long-term average. But having said that, I just would like to ask you, in the last 10 years, what has been the earnings momentum? During COVID and before COVID also, if you look at during the times of demonetization, the earnings were only at 3.5%. And today, if you look at the earnings are much, much better. And if you can look at, we expect that the earnings are going to be fabulous, fantastic. So maybe it can go up to between maybe from this year, 24, 25, 26. I can say that from 12 to 16% it is grow. Varies 3.5% and varies 16%. So I'm not trying to give any kind of a bull kind of a view on the markets, but definitely markets are expected to grow because it is actually growing on the strength of fundamentals. Having said that, I am not saying that you can just like that invest blindly. There are certain sectors which are actually valuing at fair valuations. Some are having growth valuations. Certain, I don't say that certain sectors are actually doing well. I should say that maybe large cap is slightly lower valued compared to the lower highly valued and higher valuations, but compared to mid cap stocks, it is actually lower. And certain quality stocks valuations are much, much lower than, I would say, low quality kind of stocks. So I'm not saying that you don't have to tread the market with caution. Yes, definitely there has to be caution. And of course, whatever you have to do, you have to diversify into sectors, you have to diversify into asset classes, all that you need to do. Budget earlier has been an event, I don't know, long back, but budget is no more an event. And people are only looking at the confidence and the positive sentiment. This is what actually driving the investor sentiment today. So we believe that one has to believe in the growth story of India, India's successful story.
Great. Thank you so much. We've had some questions from the audience, and I think, Mr. Krish, this one's for you. What will be a best retirement strategy for a late riser, for someone who's not expecting to get any pension and who's not invested in any markets either?
I think first start investing. That's the first thing. For someone who is not invested and I don't know if it's closer to retirement or is already retired, definitely allocate some percentage of the money to maybe a large cap fund or balance advantage fund kind of a strategy. Rest of it should be possibly in fixed income instruments that give us a yield and you can withdraw from that. It doesn't say what profile in terms of, but from whatever I could understand.
I don't know who's mentioned this question. If you want to sort of raise your hand, maybe? Okay.
Yeah.
I'm 53 years of age.
Okay.
I have another 7 years of work.
Okay.
Can you pass the mic?
You will hear me, right?
Yeah, I can hear you.
Okay,
Yeah, I can
so
hear
I'm 53 years of stage.
Okay.
I made a will like I told Mr. Rao, but I haven't invested in the markets at all. So what should be the plan?
So next 7 years, invest in markets. Look, first is you have to create wealth. Wealth creation is important. Only when you create wealth is you can start withdrawing from that wealth. If you don't create wealth, or unless you have enough and more sources of income in terms of rental or something which can supplement your monthly requirements. I'm talking from a pure investment in markets kind of a strategy. So assuming that one doesn't have too many dependable sources of income that one could depend on, and if salary and earnings are the only way to kind of this thing, the first step is obviously next 7 years allocate a part of your income after expenses to invest in the markets, to in large cap funds or flexi cap funds and so on. Because unless you create wealth, you can't really enjoy and withdraw from that.
While it is understandable that you have to invest to create wealth, but my point was where, because at my stage, where should one invest? Like we've been talking about asset allocation and different types of funds that are available in the market, which is actually confusing for a layman. I mean, we don't know much about where to invest.
The simplest thing to do is invest in a flexi cap fund. Okay, that's if you ask me one word answer could be where do you save for the next 7 years, where you don't want to be too conservative or take too much of risk in a mid and small cap kind of strategy. Go for a flexi cap strategy or a multi cap strategy. Keep investing in that for the next 5-7 years and grow your wealth. That should be the simplest thing to do.
Flexi cap is necessarily equity, right?
Yeah, flexi cap is a mix of large cap, mid cap, small cap. You get all the flavors. And you also participate in the larger growth of the market.
So there's no fund allocation to various asset classes.
That's a different category of funds. Something to silver, something to gold, something to REITs. That's a multi-asset strategy. This is a pure equity strategy.
Can I add? Yeah, thanks. And sometimes we believe that we have not planned per se for the retirement, but there is something which is planned. We have not named it as a retirement fund. That is the fundamental thing for most of us. Nothing to worry when you have, if I have not started, I can start something. The best thing at any point of the time is when I am not in a confusion, I always go for some coach. Somebody is next to me because I have seen the importance of a financial advisor or coach. It's the most important part that gives a clarity. Otherwise, a family is the best way. For example, if I can take the case of somebody is at mid 50s and 60 is the retirement age, and if it's a non-pensionable job, and all that I can go back and do some basic mathematics, and there are two ways I look at. One is we don't need to retire at 60 per se. Honestly, life starts at 60, and definitely, sir, it's the 60 is a myth somebody has created. That's today's 60. You can look at most of when I know my grandfather at 60, I have seen he has become very old. But today, people at 60 they look like a 40. They have enough energy and they live for another 25, 30, 40 years with energy. Yes, we have created so much of human capital, we can rebuild on it. We can rework on it. Finance is one aspect of investment, and that one aspect of it, I can definitely work towards it. I can plan something like, for in your case, if I am there, 7 years I have, 7 years what I intend to get there. But 7 to next 25 years what I intend to get there. Then how I can put my wealth on the 60th year, on the day I am retiring, world is not going to fall. I need to redeem entire thing and put it into my bank account. All that I need to do is I can put it next 5 years, 60 to 65. That is the money which I don't want to take risk, which it can give a liquid cash to me as regularly, frequently. The next 5 years of money, various assets. When I don't know anything, there is a wonderful mutual funds. You have a balanced asset advantage fund, BAF, which can be given equity and debt. Or there is a multi-asset fund. If I don't know anything, you have a BAF or MAF, then you can get there. And after 10 years, say I want to live till 80, 85, I can put that last 10 years money into the equity so that my money can multiply. I don't need to relax and see, my money has not grown. I can create a wealth. Honestly, those of us who are at a different age, we have not planned for it. We have enough to plan for it. And we have just looked, your balance sheet, where I am standing today. And some of us, we have a multiple savings bank account, the cash is lying. How I can pull that out? And some of us, we don't know what cash where it is not earning a single rupee. How my every rupee can work? Even, if I have 100,000 rupees, this is a conversation which I always have with my wife. If she is earning 200,000 in her account, I say you are wasting the money. Then I said, at least that can give your house help salary. I had a friend of mine who is a doctor in Bangalore. We both were traveling to Manas Sarovar. He is a famous cardiologist. And in the Manas Sarovar, while we are conversing, at that time I was talking about wealth, he is talking about health. We both were exchanging in 13 days of our trekking. And then during the conversation, he said, Rao, in my account, I have around 1.5 crore. And it's just lying, I'm busy. And I went to him after 6 months. I asked him, what is the status today? He said, I have another 50 lakhs added, 2 crores lying in my account. I told him, on the day I went to him in an Uber and he was to drop me back in Bangalore. And I said, next time, when I am coming, I will pay for your driver. He was very angry. He was lot of self-esteem. I said, how can you say you pay me? I said, आपका 2 करोड़ रुपए है ना, वो SBI अकाउंट से लेके हम लिक्विड फंड में रख देते हैं, वो 7% रिटर्न देता है, उसके साथ आपको बनने वाला है roughly, this is the money, whatever you are paying to the driver fees come from there. Instead of we ignore that small money which is lying in the account and we need to work for it. And there are various asset classes. If I have not planned something, nothing to worry. How I can plan from today is the first part of it. How I can take all the things which I have. I have a real estate, I have this thing. What is to... sometimes I have seen in Hyderabad few of my investors where I talk to them. At least you can offload part of the asset and make your life to work. And end up with all that money we need not everything to invest. We will have one life to live. We also need to start enjoying the money what we created. Probably it's all balancing. That is the reason I say family financial conversations.
You said that you are 53 and you have 7 more years to work. But I just would like to ask you, in case at least if you can part with some 5 lakhs or 10 lakhs, whatever that the savings that you have. Like Mr. Rao was mentioning that
He is a wealth manager, he handles beyond. I am only a mutual fund guy. I think we can take it.
Beyond mutual funds.
Yeah, apart from mutual funds, what other areas would be good investment that can save us during crisis?
To my mind, mutual funds extremely efficient, very friendly, and most like in case of an emergency that people require, you have debt funds which you can access in 1 day's notice. You have fixed deposits that you can always redeem. That's obviously the most preferred, simple, and easy option. And this thing. I think it's important to classify and do like we go back to the first question they asked today about asset allocation. And to that extent, you should look at instruments which are easy to redeem, like a fixed deposit or a debt mutual fund, without erosion of capital. That should be, this thing. So in that category of emergency withdrawals, these 2-3 options come to my mind. Definitely fixed deposits and debt mutual funds, fixed income funds that come that you can withdraw any point of time.
Probably thanks Girish for it. And when we are anticipating sometimes crisis or anything, we can't predict the markets and we have to prepare for it, anything. And when there is a crisis, we call in the mutual funds or overall financial planning, we call this as an emergency fund. And each of us can decide what is that emergency fund I can look at. If I am having my spouse is working, then 3 months salary is sufficient for me as household expense. That is an emergency fund that I can put it in my bank deposit or that I can put it in a liquid fund of the mutual funds, which is available to you at any point of the time. And another crisis we can get, one is a money crisis can be handled with emergency fund, but your health crisis can be handled with health insurance. Your life crisis can be handled with a life insurance. You need to have those bare minimum stuffs so that you are preparing that crisis, and I pray God no crisis should come. But we need to prepare, then you can handle it well. It is like for the examination, if I read well, I don't need to worry about the paper, then I can do well. And it's all that you are preparing. And emergency fund is the must and the must and the must. You need to decide the quantum, 3 months, 6 months, 9 months, depending on your psychology, depending on your other source of incomes which are available to you. That's where you can look at it.
Great. We have a couple of questions that has come up on, long term and short term. I know we've gone through these terms in your presentation as well as a panel discussion. So, is there, a definition about what, does it change from person to person, or is there an average? How can you define that long term versus short term?
Long term and short term is most commonly, read terms about markets that when you read or listen, someone says long term, short term. Typically, from the investor standpoint, there's one investor, this trader. For trader, long term is 1 day, okay, and that's as long as he can, kind of wait on his underlying call that he's taken. But from an investor point of view, long term, in my mind, is at least a few years, because in equity markets, as you all understand, equities are never. It's not a even. It's not that every year equities will give you 10%, 15% return, 20% return, and all that. You suddenly get 20% in the first year, then it doesn't perform for 2 years, and then the 30% comes in third year. So in equities and from a pure investment point of view, if someone says I'm an investor and what should be my long term, how should I define long term? Long term should be defined at least 3 to 4 years or more. The more, the better. Okay. Like I said, for a trader, even 1 day or even a few hours is long term, so that we'll disregard that. And short term essentially depends again on your liquidity requirements. If you, like he said, emergency fund is very short term in nature. It could come tomorrow, it could come day after tomorrow. You can't define it. But so that's the emergency. In between emergency and long term, you will have something called short term, which is slightly more than emergency, and you can have then everything will be long term. So short term is anything more than a few months till about a year and a half, and long term should be anything which is at least held with a horizon or with a thought of a few years. You might exit before that, you might make tons of money before that, you will exit, you might lose it before that. But the thought when you're investing is like when you buy a house, you don't think that you're going to exit it in the next 1 year's time. You want to live, you want to see your children grow up, you want to see your grandchildren grow up. So it's like you don't have a horizon for that. It's like it's going to be there forever. So ideally that's long term in my mind. But for the benefit of everyone to say what is the horizon years, should be at least 3 to 4, 5 years plus.
And I would like to add something more to it. Since a very well defined by Girish, but if you have defined your short term and long term, what is the kind of investment decisions you can take? Is there a benchmark? Is there a thumb rule? The simple thumb rule is for any investment, there are three characters: safety, liquidity, and return. For short term, ensure you are focusing more on the safety and more on the liquidity, less on the return. Long term, when you are investing, reverse the sign: returns, liquidity, and the safety. Because it can be lesser safe, lesser liquid, but it can give higher return, so that you are getting your wealth reasonably balanced.
Great. We've had a few questions come up on mutual funds, and Mr. Rao, if you would like to
Shall I
answer
answer
those
this, or
questions.
we can complete the other panel?
I just would like to
Sure,
add to this.
Sure.
This is something. If somebody, whenever they are investing in equity, the probability of equity delivering zero returns or negative returns, when we have done the study for a period of 30 years on the Sensex and on the Nifty for 15 to 20 years, and both are actually passive investment style where it is not actively managed, there is no fund manager. So we have seen unless and until you don't cross a threshold of 7 to 8 years, there is always a possibility that the funds actually can deliver sometimes minus returns, and but only when you cross the threshold of 8 year, we have seen there are no negative returns, but at least you have some 5 to 10% kind of the positive returns. So when you are investing in equity for the sake of accomplishment of your objectives, be prepared, as he rightly said, at least for 5 years, because when he said it is 5 years, it is actively managed kind of mutual funds that he is talking about. So this is something that I wanted to share.
Great, thank you. We've had a question come up on, how we're looking at being a developed country by 2047. Are there some lessons in terms of, what we can take away from developed countries like, say, the US or UK, and, how India can experience any changes in investment based on, how these countries have reached a developed stage?
From an investor standpoint, I think today we have seen over the years developed countries have higher share proportion in investing out of in the fund savings that they have. Even today, India as a percentage of household savings getting into investments is would be what, 10%, 12%, maybe
Little one up to
16%. Okay, so something that they have done is they have. And that has also, kind of opened up them to different markets, different countries of investing, and a whole evolution is taking place in a market like US, which is the most liquid market. If I were to take an example, across the globe. So from a Viksit Bharat 2047, from an investor standpoint, apart from what Mr. Rao said, how we can contribute to community, and what the government can do. I think as an investor, what we can do is, focus on the Indian economy, focus on contributing to community, like he rightly said, paying our taxes like we all do. But most importantly, having faith in the Indian economy, in the ecosystem, in what you and I are doing, and continue investing in that. I think from an investment standpoint, I think that stands out for me. There are a lot of things that will go into contribute to Viksit Bharat, but this definitely is one of them.
Thanks, Girish, for it. And probably, if you are looking at, if this question is coming on the nation perspective, there is something as a super highway is laid down for you. There are a lot of investments are going to happen, and there is a lot of spending is going to happen. And as he rightly put it, there is an infrastructure. Means we get an opportunity to put ourselves, our capital to work during the transition from the developing country to the developed country. Whatever the one I have the money today, probably I can consume less, I can spend less, and save and invest more, so that I get that opportunity to get into accelerated wealth mode. If I am spending more now, I am just missing that bus. It is typically, if somebody can look at Hyderabad city 2014 and to 2024, the the division of Telangana, you have seen that accelerated growth. Somebody who parked their money, probably the real estate, previous 30 years guys would not have made money, but those who have invested in the last 7 to 8 years, they have created a lot of wealth, because we have this REITs, we always discuss about the story, about the case study about Hyderabad real estate, sudden wealth stage. This country is coming to a sudden wealth stage. Then we are at a right spot. All that I need to do at right spot is I need to drive right myself. Either what I can do is I can earn more, I can also ensure my money is working for me. I call this in a simplification. All of us, when we are managing our money, I use this mechanism called 4Gs of the money. And 4Gs are not the 4G network I'm talking about. This is like, if the wealth management, if you can take from Chanakya Chandragupta, it's an Arthashastra. You need to get the source of the wealth where you are getting. Means get your wealth. Means how you can currently, some of us who are working, I get salary. Some of us are having job, business, entrepreneurship income. Somebody is having agriculture income. How I can enhance my earning capacity, the first part of it. And whatever I earn, the second G is, I need to grow that money. This is an opportunity when Viksit Bharat is coming. At this point, I can grow my money much faster. How I can invest into the sectors which can grow well. Or I can put broadly in Indian economy, means I can put in my Nifty 50 or Sensex or the broad Nifty 500. No, my money can grow. Definitely, it can grow much better. Growing your money. Growing alone is not sufficient. We need to protect what it is grown. Sometimes, money just disappears. And, during COVID, I have few colleagues of mine whose portfolio was 5 crores, 10 crores. Suddenly, overnight, it has come out back to 6 crores. 40% down. How you can protect that and you can get there. And the last one, earlier we were talking about bill writing, etc. None of us are going to live, for eternally. We are going back to the source, our source. We need to give back to the society. Whether you want to give it to the church, or to the mosque, or to the temple, or to the family, give your money, the 4 Gs of the money. And the 5th G, you want to add 5G, do it out of gratitude and grace, which may not be a financial planning, but it's a life plan.
Thank you so much. One question for Mr. Girish. Can you highlight the difference between financial planning and investment planning?
So, financial plan is like a structure. It's like you define your long-term goals, you define your short-term goals. It's like a structure. So it's like you buy a plot and you say, this is how my house should look. Should be living room here, kitchen should be here, or this is the structure of the house. I want 1 floor, 2 floor. To define a structure, that is financial plan. It is aligned to your specific risk appetite. It is aligned to your specific goals. That is financial plan. Investment plan is the actual execution of it. So you kind of say, okay, I now say, hey, I want to retire in 10 years. Like the gentleman just said, you will be retiring in under 7 years. So that's the financial structure of giving, saying that I want to save for the next 7 years. Now you go down and say, for the next 7 years, can I take more risk or should I take less risk? And what kind of funds I should invest in? What should my tactical allocation? What should my core allocation? So the execution part is more about the investment management, investment planning, monitoring it, reassigning it, realigning it time to time. That is more about the investment plan. So it's more about detailing execution. Financial plan is more about structuring, giving a broad structure, understanding the life goals, understanding cash flows, and then putting it to execution.
I think it's fabulously answered. I think you also want to add something. I'll just give it to you, Jayant. It's financial planning is rightly put it, but in simple terms, I can tell you, financial planning is something where you are today, where you want to go in life. Like the way when you come here, there is a GPS. I put my GPS to Lemon Tree Banjara Hills. If I did put Lemon Tree Banjara Hills, it would have taken Lemon Tree to Jubilee Hills, Lemon Tree Madhapur. Then you are at a wrong GPS. Means you need to have financial planning is a goal positioning. The GPS is your goal positioning system. And in the GPS, what exactly happens is, say you have started from Amirpet to Lemon Tree, and a GPS would have showed it 40 minutes you are coming here. But in between Panjagutta, you see the traffic. Then there is a rerouting which has happened. Financial planning, what happens is that 40 minutes could be or 40 years, this is the plan. But during the 40-year, market would have gone faster, you reach faster. Market has not gone right and you have gone. You get rerouted. While rerouting, it has got an alternate route. Maybe it is taking, instead of 40 minutes, it will take 60 minutes. You come through the Latikapur route to come back here. That is where your investment planning. Investment planning can become dynamic and gets rerouted. Financial planning give a destination to you where you want to go. Sir. Thank you so much, sir.
Well explained, and you have not left any kind of scope for me to talk further. But having said that, just I would like to say that financial planning differs from person to person, and differs from, I mean to say, everybody has their own unique needs, and it all depends upon the kind of what is the risk absorption and what is the time that you have for achieving for each of the goal. And I just would like to give one example. For example, if a girl child or a male child is born in the family, and you want to see that she has to become a doctor or he has to become a doctor. The day she has born, you just take a white paper, type, and in case by then if you have named the child, write the name of the child, and then fix the corpus or the amount that is needed to ensure that she becomes a doctor. And unfortunately, one animal which always kills us unknowingly is inflation. And within inflation, if we are talking about your consumer price, inflation, etc., we generally talk about. We generally don't distinguish between sector to sector. Unfortunately, in India, inflation grows as far as education is concerned at 12 to 13%. So, if you want to ensure that your child is really becoming doctor at the age of 25, or maybe at the age of 20 when she has to get into the college, you please understand what exactly is the corpus that is required. And what is that you can actually part with today? Do you have the 5 lakhs, 2 lakhs, whatever it is? And then, once you have identified, take the inflation 100 basis points or 200 basis points more. For example, if you are thinking that the inflation can grow at going forward, we are estimating that currently it is at 4%, but it can probably be come down because of the reforms or whatever it is. It can come down to 3.5%. But think that when it comes to the question of education, you think that, I don't know exactly, 8%, 9%, this is what actually you ought to do. So that way, finalize and fix, take the financial planner, Girishji, and he will be able to tell you what is the cost of making your daughter a doctor. So once that is done, your objective is not the particular scheme delivering a particular kind of a return. Your objective is to ensure your daughter and get away from any kind of decisions. Oh, ye fund perform nahi kar raha, but ensure that the same money goes into some other performing fund. But under no circumstances, the objective of making your daughter should get defeated. So this is where some emotional decisions come into picture. So for the day when you are compelled to, reading the amount, please see the photograph of your daughter or son, and that is more important. That's how actually you will get hooked to investing for long term. And once you invest for long term, whatever the period that you decide, the probability of you achieving or accomplishing the target are far, far higher than just looking at as an investment as an investment. This is not an investment. You are going to get accomplished only when you see that finally your daughter becoming a doctor.
Thank you so much. Mr. Rao, if you would like to answer the mutual fund question, we have a few coming from the audience.
There are a few questions on the mutual funds. It's one not more than 60 seconds for each. Somebody has asked with the present situation, SIP investments, everyone say 15 into 15 into 15. That is the thumb rule. What he or she meant is 15 years you are investing for the 15,000 rupees at a 15% return. That will give a roughly 1 crore. This is an Excel sheet calculation. But Excel sheet calculation will not make you the Excel returns, because I have seen in my experience, there were only 10%. If I can go back 2017-18, my best performing fund also would not have given more than 12% in the 12 years kind of return. And last 4 years is the exception. Just don't believe in that as a person. If you can look at anything, the India's GDP plus the inflation, that percentage you can put, that can work for you. And the next question asked is, why not about STP? STP, you can't put the number. STP is the one, those who are not having a regular monthly income, they can park into the liquid fund and transfer to the equity, so that you are diversifying your risk. You are not assessing the market, how this is today is placing. And which is better, SIP or STP? Both are better. Investing is start investing, and SIP is the best way to start. You are automating your investing, and it will make automatically happen. This is a question which has come from Mr. Nagmohan. I think he's still there. Okay, sir. The question he had asked, the first question, I think 5 questions in that. I'll quickly answer. You asked me in my first slide that money definition. That girl said to me is MONEY. She said M and Y I remove from the name, that is mine, and that one is 1 rupee coin. I am defined by how I invest my 1 rupee. I am an investor. If I spend my money, 1 rupee, I am a spender. If I save my money, I am a saver. This is a small girl answer, that's the one. And second, asset allocation, how do you understand? I think we had a great answer from JNG. I don't think it needs anything. And SWP also, he gave a clarity. And when it comes to nominee, husband, wife, nominee, children, whom to give nomination, it is like this, that is a family issue, we can't say. But the best part is write your will. Nomination comes secondary, because will, you decide where to go. For example, after my death, my spouse is the most important part. This will go to my spouse. On her death, this money will go to my children. I have seen rest of the families, and if they have been then mess up, even you have a love for your child may not have the same love for you after you leave, and you need to be differentiated. And second part is, when you are planning for your retirement, plan for your retirement, not for your child one. Your child is not your retirement fund. You are not an emergency fund for your child. Ensure that differentiation. And then the next question which is coming is a short-term safer. I think this question is handled by Girish, and that has got an answer. And anything else, we will talk over a cup of coffee next weekend. And what strategy should follow for the exit or withdrawal of the funds? Have a good corpus. If you made substantial return, you are feeding something to book the profit. Nothing wrong in booking the profit and making it. But if you are invested for a goal, as the Jayanti just said, for a doctor to make my child, I don't want to withdraw it until and unless my daughter becomes a doctor and that money is lying. But I am in the safe fund if I am invested in the right fund. It's a right asset allocation, and financial coach can give the better one. And criteria to select good mutual fund. There is no criteria for a good mutual fund. The criteria to select the mutual fund is, first you get your right goal, and then you choose the fund. Because where I have to go is most important than how I have to go. Once I decided where I have to go, then what time I have, then accordingly I can choose. And there could be a good coach is always, needless to say. And somebody has asked about one of my fund's performance. I am available after tea. I am not supposed to talk on the stage of any of the fund, good, bad or worst. And I am a sales guy. I will sell, comb to the bald man, and I don't want to do that. And I can meet you after this. This is somebody who asked about our fund. This is the 5 questions you can ask.
Great, thank you so much. That was really helpful. In the interest of time, I know you've all stayed back beyond the end time of this discussion, but a quick question to all our panelists before we end. Based on your expertise, what is one tip of smart investing which we call as Shikshit Niveshan that can lead us to Viksit Bharat by 2047? A quick one tip, please.
Okay, I will say only 3 or 4. First of all, stay for long term in the market and have the clarity as far as your objectives are concerned. Believe in asset allocation, review your portfolio regularly, and in case you have to rebalance your portfolio, please do that. And finally, believe in the growth story of India.
I think what I would say is investment, like they always say, is a very boring thing to do. It's like watching a grass grow. So it's extremely boring. So there's nothing smart. If in fact, just saying that you just invested and forgot, which is the most dumbest thing to do, has created more wealth than people who try to be smart in creating wealth. So the smartest thing to do is not to do anything. Just invest and forget. That's all.
I would like to give one case study. In the year 2000, when I was also equally new to mutual funds, and that was the time I was entering. And my brother from US, he came down and he was saying, I want to invest something. By then I was not having so much of conviction what I have today. So I just told him, invest whatever the money that you can. He said, he has invested some money, which I have actually forgotten long back. And this has happened recently. And he came back and he said, Anaya, I'm getting all these investment statements. What is this? I just want to know. And there is only folio number I'm able to trace, but the other details are not there. So I went to, okay, I will do something. So I've been to an AMC office, which I don't want to disclose. And he has invested, and I said, this is the only folio number that I have. Can you help me? He said, I can do, sir, but only thing is that he has to give his recent KYC and all those formalities, whatever that required. I did all that. And finally, the money was 64,000 rupees, and the money invested was only 1,000 rupees. So, fill it, forget it, and shut it. What we have heard from Hero Honda has actually worked.
That's nice. I think I like to put it. I will, probably I can say, sip and sip. I'm not talking about the sip which we do in the evenings here. I'm talking about first is the SIP, that is save wisely. I is the invest smartly, and invest rightly. And P is the plan smartly, the first part of SIP. Second part of SIP is, I'll talk as S is the savings part. All your 1 year requirements, do SIP in the liquid funds, that is the saving part, your liquid money. I is your investments, all financial goals, they will talk to you, they will teach you. For each of the financial goal, you start for investment goal, you can keep one SIP, whether it's the child education or the retirement, or buying a home or replacing the car. And the last one, the P, we have an onus of responsibility to contribute to others. COVID has taught us, if I am healthy, not sufficient, even my neighbor need to be healthy. Philanthropy is the most important part. Start one SIP to contribute to the society. That is the SIP, the philanthropy part. That is the second SIP. And the last SIP is, I think they put it very rightly since it's the Vikshit Bharat, say invest perpetually, don't worry about it. And when India prospers, we will prosper. And Bhagirathi and ET for this opportunity. I really enjoyed with both of my good friends. And I wish you all, have that kind of wealth. I think, there is a Sri Suktam, we always chant one word called Jata Vedam Lakshmi Manapadhamini. That goddess Lakshmi come and stay with us permanently. I wish that goddess Lakshmi will be with you, all of you, and we will all be prosperous. Thanks for this opportunity. God bless you all. Thank you.
Thank you. This very wonderful discussion.